All right, good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Stocks, crypto, and gold starting the week with a rally. The Dow ending up nearly 400 points at the closing bell. The S&P 500 gained more than 100, and we see the Nasdaq pop more than 500 points, showing its best day since May. Investors taking in the potential end of a U.S. government shutdown this week. We'll get the latest on that from Washington later this hour from Grover Norquist, the president of Americans for Tax Reform. Tech stocks led the rally today with investor spirits lifted by Congress taking a big step toward ending the record-breaking government shutdown, which has been going on for 39 days now. We see the Nasdaq gained 523 points at the bell, the S&P 500 up 104, and the Dow gained 381 points. The yield in the 10-year note now at 4.12%. Gold moving higher, hovering at around $4,100, $4,125 here an ounce. Silver's back above $50 an ounce, and Bitcoin is hovering above $106,000 per Bitcoin. That bill up for a vote now for final passage in the House, in the Senate that is, though its fate in the House remains uncertain. It'll reopen the government through January 30th, and among other funding provisions, the deal lacks any immediate vote on the extension of health care subsidies earlier demanded by Democrats. Among the tech names that got a lift today, we see NVIDIA rebounded by nearly $11 at $199 and change. Apple up more than $1 to $269 and change. Paramount Skydance reported third-quarter revenue that came in just below Wall Street analysts' expectations, but the company struck an upbeat note for what lies ahead, raising cost savings, projecting stronger streaming profits, and signaling upcoming price hikes for Paramount Plus offerings. Looks like Paramount Skydance shares closed at 70 cents today. Let's take a look at that. Up 15 cents at 15 and a quarter at the closing bell. The price of gold's been bouncing around lately, moving higher today above $4,120 an ounce. The airline stocks were in focus today. Despite optimism surrounding the end of the government shutdown, airline stocks, including Delta, United, and American, all moved lower as the industry faces ongoing disruptions due to what's been happening on the airline front, on the airport front, due to all of the TSA and other personnel that rely on their paychecks from the federal government. Hopefully that'll be coming in again soon. Phillips 66 announced recently that it stopped processing crude oil at its Los Angeles refinery, with that facility remaining units to be idle by the end of this year. In case you're wondering why gas prices have been spiking lately, despite the lower oil price around the world. Oil is hovering around $60 a barrel. Our gas prices are about 40 cents a gallon higher than where they were a year ago. We're going to be seeing another refinery close by next spring. Mortgages back in focus. In another effort to make home buying more affordable, President Trump has floated the idea of a 50-year mortgage. We'll talk about that, and we'll talk about it with Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book, Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thank you very much for coming to the line here this afternoon.
Frank, it's great to be back with you and hopefully nearing some end to what now, as you know, is the longest government shutdown in history. You know, we talk about it like it's a spreadsheet, but we have to keep in mind there are human beings, you know, whether it be TSA operators or any number of government employees now have been working for weeks without a paycheck, just here on the cusp of the holiday season. So, you know, whether I think the market was trading on that somewhat today, it's just trading on positive momentum for tech in general. But, what, you know, as we said, behind the spreadsheet, they're all human beings, Americans, many of them serving this country, and I do hope we can get them paid.
On the live with Jonathan HOENIG. So the airline stocks pulling back today. Obviously, it's been an uncomfortable situation, to put it politely, at the airport. So what's the outlook for the airlines in all this?
It's interesting. You know, they really haven't been leaders at all, Frank, but they've survived pretty well, at least during the during the shutdown, but they haven't been really where the action is. I mean, the market's actually been quite weak for a number of days. It was trading with more new 52-week lows than 52-week highs, and up until today, majority of stocks trading below their 50 and 200-day moving averages. So we've actually seen a bit of a downtrend in recent weeks, and airline stocks just haven't been leading the way. They haven't been soaring higher. Today, with just that surprising snapback in the AI names, it's just the real question here, Frank. Now, are we going to move higher, and is it going to be those old names, the NVIDIA? I mean, NVIDIA is a $5 trillion company. It almost sometimes during the day seems to trade like a penny stock, whipping around by $5, $10 at a time. So, is the market going to continue higher, and is it going to be the same old AI names leading the charge, or is there, if you will, a new sheriff in town? I don't think it's going to be the airlines.
All right, and NVIDIA and the Magnificent One, as it's known, and the Mag 7 names, what are your thoughts about their performance lately? We did see a pretty decent bounce back today with the NASDAQ at more than 500 points, by the way, and the best day since May for the tech names, many of them at or near all-time highs. What's your outlook on NVIDIA and the Mag 7?
Well, the thing, Frank, is that it's gotten now where it's hard to avoid. I mean, even if you own the supposedly diversified S&P 500, this is the index fund that's in most of our 401ks. It's got 8-9% of its assets in this one individual stock. And that does remind me very much of the late 2000s when you had individual stocks. At the time, it was names like Cisco and Oracle, becoming these huge dominant parts of the major indices. So, I'm looking at places that are off the radar screen, not necessarily major parts of the indices. So, for example, one I like now is BOAT, B-O-A-T. This is a fund that tracks all the shipping stocks. They've been doing well now that Trump seems to be at least holding off a bit on some of the new tariffs. So BOAT is one I like.
November is heating up for U.S. soccer.
The United States need to be a little more nasty.
Big international friendlies for the men.
Callum, that was nasty.
And a Black Friday friendly for the women.
The expectations have always been here for this team. We understand that.
Listen anywhere on the go with the Westwood One Sports app. And for behind-the-scenes stories, catch the U.S. Soccer Podcast.
Boy, do we have an episode for you.
Follow and listen on your favorite platform.
And in terms of those Mag 7, I mean, Frank, they're just so ubiquitous now. They're so well known. I mean, as we joked last time, nothing against Uber drivers, but my Uber driver is talking about how much money he's making in NVIDIA. That usually signals more like the 8th or 9th inning rather than the 1st or 2nd of a stock move.
All right, we're on the air live with Jonathan HOENIG. And let me ask you about the cryptos here. They had a rough day last Friday with Bitcoin cracking below 100,000 there and back around 106 here now. ETH at around 3,600, and the other ones have also rebounded somewhat since that washout last week. What are your thoughts about what's happening in crypto land at the moment?
I think that 100,000 is a real key number, Frank. I mean, it's about probably the biggest psychological round number you can think of out there. Crypto was interestingly kind of led the NASDAQ down in recent days. It's bounced a bit, and still about 30% that is Bitcoin for the last year. But when you look at the stocks that are breaking out right now, the equities, it's certainly not the Bitcoin miners, so it's not a lot of those Bitcoin stocks. So this is uncharted territory for Bitcoin. But I think 100,000 is going to be that real strong support. I think if you can't hold 100,000, it's 80, 70, 60 could be the next potential support. So 100,000 is key to hold.
Had some interesting conversations over the weekend. People in the energy business who are focused on AI and also crypto, the tremendous energy use in those sectors, and that impacts all sorts of energy sources, including nuclear as well as fossil fuel. What are your thoughts on that? And it seems to be certainly an emerging area that investors should probably be paying attention to.
Absolutely. I mean, we're seeing this kind of nexus, Frank, as you're alluding to, of utilities and tech companies now investing in utilities and investing in nuclear options. One name that I've mentioned a few times on your show as a way to play it is a really dividend-heavy name that tracks a basket of master limited partnerships. These are a lot of companies that are involved with the transmission of energy. So, for example, gas pipeline companies or liquefied natural gas fuel depots. AMLP, that's AMLP is the ticker symbol, yields over 6% and strong on the charts as well. So, we're going to need more energy for all these crypto needs, and I think AMLP is one off the radar screen way to play it.
That's very interesting. With oil hovering around 60 a barrel here, that's also very interesting. And we're watching the refineries start to close here in California, and that's expected to pump up the price of gas here. We're already paying the highest in the country. In fact, about 40 cents a gallon higher than where it was a year ago, and probably about $1.50 or so higher than the national average at this point. What about the traditional oil companies here now?
Well, there's a great way to hedge that gas exposure, Frank, and there's an ETF. It's UGA. That's UGA. It literally just tracks the price of gasoline futures, less expensive, I should say. So, it's recently at a 20-day high. Oftentimes, a 20-day high turns into a 50-day high or a 100-day high. So, if you're worried about a higher cost of gas or higher cost of fuel writ large, UGA, definitely do your due diligence. But this is one that has caught my attention in recent days as a way to play that gasoline trend.
On there live with Jonathan Hoenig, and I noticed Eli Lilly hit a record high today. What about the drug and healthcare names nowadays?
Quietly, great example of old-fashioned kind of value names, Frank. Not particularly sexy, not quantum computing, but both pharma and healthcare writ large are doing quite well underneath the radar and not trading at the valuations that the AI names are. So the two I like are PPH, that's the pharma ETF, and VHT, that's the healthcare ETF. And this owns the big, well-known healthcare companies, the Lilly's, the Mercks of the world, and they're doing well, especially now. And I think it's a good defensive play. If the high-tech growth names cool off, I think these value places will be a place you can hide and make money.
Very interesting. And we talked about the Dow, the S&P 500, and NASDAQ. What about the small cap index, and how are the small caps holding up nowadays?
Well, again, an area, Frank, that's been completely overlooked for the better part of a decade now. We used to be accustomed to small caps outperforming large caps, but they've really been underperformers for a long time, and I think that presents an opportunity. One way to play it was with a fund I like. It's SCAP. That's S as in small, CAP as in cap. And this is a small cap fund that's focused on dividend paying stocks. So, you're going to get that, 5, 6, 7, 8% regular yearly dividend along with potential for price appreciation. So, it's tough to be a contrarian, Frank, and when everyone's talking about NVIDIA and Meta every day, to look at a small cap fund, it's kind of like you feel a little bit not part of the party. But, I think that's where the opportunity is to go what's working but isn't being talked about, and SCAP is one of those names.
Very interesting. Russell 2K small cap index, which tracks those small cap names near its 52-week high, by the way. Just pulled that one up. This one we don't often quote, but certainly something that is very, very important. Certainly the real estate sector getting new attention today with President Trump's idea of a 50-year mortgage. We're going to be talking more about that later this year with a mortgage expert. But what are your thoughts on that and its potential impact on home builders and other real estate-related stocks?
Well, my fear, Frank, is that this is an initiative not coming from the marketplace itself. And look, just as we saw the entire EV, billions and billions of dollars misallocated into EVs because government thought it was a good idea to incentivize electric vehicles, government should not be in the business, in my opinion, of dictating what type of mortgages Americans should take. So, that should be an innovation dreamt up by private banks, private lenders, and adopted by private homeowners as well. So, the issue, in my opinion, the issue with home affordability is not the length of the mortgages, but the availability and the supply of new homes. And if there's something too expensive, you build more of it. So I think we need more supply, not more debt, which is ultimately what those 50-year mortgages would create.
All right. I guess you're talking about free mortgages in New York. What's your reaction to what's happening there in New York and the election of this new mayor there?
Well, unfortunately, I think they're going to get what they asked for, Frank. And at the end of the day, the most successful cities and the most successful societies have always been the most free, most economically free in particular. So, for every, thing that Mondami has talked about in terms of involving government and taxing the rich to pay for it, I mean, I truly fear for the financial center of New York City will that continue to be the financial center of this country? And these are very highly mobile firms now. There's no reason to have a floor. They're there for cosmetic reasons primarily and historical reasons primarily. So, if Mondami goes through with a lot of this, Frank, I would not be surprised if you saw the NASDAQ, the New York Stock Exchange, and all the like, whether they go to Austin, Texas, whether they go to Miami, Florida, but moving out, as the saying goes, money goes where it's treated the best. And if it's not being treated well in New York City, you're going to see scores of large companies make their hasty retreat.
That's an excellent point. And Jonathan Hoenig, any other specific places where you are putting money now and or taking it off the table?
I think just as in the first half of the year, foreign stocks outperformed. So I'm still looking at a lot of the foreign value names. ESV is an ETF that tracks foreign value-oriented stocks. So these are not the high flyers, the ones with the much cheaper valuations. Always do your own due diligence, but I do have a newsletter over at capitalisttpig.com. ESV is one of the names on that newsletter. Be happy to welcome any listeners over at capitalisttpig.com as well.
Terrific, Jonathan. Thank you very much for kicking off this new week with this rally here. Appreciate it. Jonathan Hoenig, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Thank you very much, Jonathan Hoenig, for joining us live here this afternoon.
My pleasure. Thank you, Frank.
Thank you very much. And out to the freeways we go now on 790 KBC. Mottek On Money continues. 790 KBC might be over soon. 39-day government shutdown could soon come to an end. It's already a record-shattering government shutdown after a weekend of deal-making in Washington. Looks like a deal came together here. A new bill quickly advancing in a key Senate procedural vote overnight after enough Democrats joined with the Republicans to avoid a filibuster. Let's get the latest on what's happening there. Grover Norquist joining us live now from Washington, the president of Americans for Tax Reform, who has a front row seat to all this. Grover, thank you very much for taking the call here this afternoon, and take it from the top. Tell us what's happening there.
Michael Rosenbaum and Tom Welling take you behind the scenes of one of the greatest shows of all time.
They're Ultimate Rewatch podcast. We're in the midst of season 7. And
hold on. Obviously, we had a very successful television show for 10 years. That was Superman based.
But we had to make everyone believe that you were Clark.
I got to be honest, I was surprised at the end of this episode that I wasn't.
I was too!
Talkville, the Smallville Rewatch podcast.
I'm not sure I knew when I was filming it that I was not me.
Follow and listen on your favorite platform.
Well, it has been quite some time, as you pointed out, when the Republicans in the House passed a continuing resolution to continue spending at the present level for 2 months. It was not a big deal. There was no surprises in there. There was no secret stuff that would irritate Democrats. And then it went to the Senate, and all the Republicans except Rand Paul voted no, and he voted no because he just says it's too much spending, which is true. But we had to pass a budget. And most of the Democrats voted no, and did so, I think we're at 15, 16, 17 times the Democrats voted no to allow the government to be open and move forward for a couple of months until we can do a budget for next year. And they announced, we are holding the country hostage. We will not pass a budget. That's why you saw the folks at the various airports having trouble getting planes landed on time because people weren't getting paid and weren't coming to work. There were threats that if the president hadn't been quite active in various ways, you were going to not pay the military. There were very serious problems as a result. And the Democrats said, we will continue to keep the government technically closed down and not funding hundreds of thousands of federal government workers unless you give us $1.5 trillion with a T in welfare spending and various spending and different things, basically a cover-up for all the failures of Obamacare. And that's what this was. This was an effort to paper over Obamacare's failure. Listeners may remember that Obama promised that your life insurance, your health insurance, not life insurance, health insurance, would go down $2,500 for a family if they passed his bill. And then, of course, they wrote a bill which increased the cost of everybody's health care. And health care costs went up, and insurance got more expensive, not less expensive. Then when people got mad, when the Democrats were about that, the Democrats won the House, Senate, and the presidency with Biden there. And he turned around and said, here's what we'll do. We'll pretend that we didn't raise the cost of your health care, and we're going to take hundreds of billions of dollars and give them to the insurance companies to cover the costs, the higher costs of Obamacare, which you'll pay in taxes, but you won't pay it in insurance. And what has happened is we've now seen the failure of Obamacare. The cost of health care has gone dramatically higher for all Americans. It's gotten worse, not better. We've been there without Obamacare at all. And the Democrats say this is so embarrassing to us. Here's what we'd like to do. Give us $1.5 trillion, much of which goes to paper over the failure of Obamacare, and then we'll consider have a normal budget. And the Republicans said, no, this is ridiculous. And we do need to reform or repeal or do something to the damage that Obama and Obamacare did to our healthcare system. And the Democrats tried to hang on and tried to say, oh, the Republicans shut the government down, although they were talking openly about shutting the government down. They said the shutdown was their leverage. That's a quote from one of the leading Democrats. It's our leverage against the American people to force the money that we want from government. And the Republicans said this is not happening. And they went out and made their case on talk radio, on television, through all the various media that exists these days. It didn't exist 30, 40 years ago. And increasingly people saw that the Democrats had closed the government down for political reasons. And then they even added, well, as soon as we win the elections in Virginia and New Jersey, we want everybody all excited. We've got to stop the Republicans. They're closing the government down. And as soon as they won those seats, they said, okay, now we'll open the government. But even then, most Democrats voted no. I think we got 8 Democrats to vote with the Republicans to break the filibuster. Democrats used to not like the filibuster till it served their purposes. And now we're going forward. The Democrats wasted everybody's time. It was a political move. It was never going to accomplish anything. It was embarrassing for them. It hurt the country. And a lot of families that work for the government said, well, we didn't get paid for 30 days or so. It's a little bit rough. But now we go forward, and the budget will be clear like it was before until the end of January. And then we can have an argument about how much money we should spend on cleaning up the mess of Obamacare or other things. So the Democrats conceded on just about everything. I can't think of anything that they won other than they'll have the ability in the future, as they always could, to vote for massive spending increases if they want, but no promise that they'll pass. Republican House and Senate are not going to pass massive spending increases that the Democrats want. So it was a waste of everybody's time. It was a political move. And our friend, Mr. Schumer, the lead Democrat in the Senate, the Democratic leadership is all in New York City. The head of the House Democrat lives in New York City. The head of the Senate Democrat lives in New York, not New York State, New York City, okay? A couple of blocks from each other, for crying out loud. And AOC, who's threatening Schumer and the other Democrats for leadership, she's from New York City as well. So we really have a Democratic Party that's removed into a very left-wing corner in a very tight-knit area of the country, not spread out along in the 50 states. And they made a political move, and it wasn't very smart, and it hurt the country, and it hurt them.
Laying it on thick this afternoon, Grover Norquist, president of Americans for Tax Reform, and you just reminded me what you call a bill or a law that makes a big difference. People were very much in favor of the Affordable Care Act, not so much Obamacare, right? That's how it played out. Now, you mentioned the politics and all this, and what's getting a lot of attention today. 8 senators, Democrats, facing a blowback as they broke ranks to allow the Senate to move forward on all of this. So where do we stand here? When is this government shutdown officially going to be over?
The House is expected to pass the bill on Wednesday, 2 days from now, and then the Senate should act. The Senate voted to break the filibuster. That was the Democrats saying, we will not even allow a vote, and it takes 60 votes to say we insist on having a vote. And the Republicans said, of course we want to vote. We've had 16, 17 votes to have a vote. But 8 Democrats joined the Republicans. These 2 Democrats from New Hampshire. The Democrats are about to lose one of their Senate seats in New Hampshire because they've gone so left-wing. The 2 senators from Nevada also threatened by the left-wing trend of Democratic politics in the country. So there was a handful of folks and the senator from Pennsylvania said, I'm not putting up with this. This is nonsense, and I'm ashamed of my party for doing this. Fetterman. So there will be first a House vote, then a Senate vote, then it goes to the president. Now a Senate vote only needs a majority, so it'll be interesting to see how Democrats don't actually vote for the budget, just voted to allow to have a vote on the budget. And then it moves forward. Then hopefully there'll be discussions about the budget between now and the end of January, but that gives us November, December, January, 3 months to look forward and see how we can reform government spending. And the Democrats can make their case, let's spend more just like we did with Biden. And I think the Republicans will say, let's not.
Very interesting. Who's the power broker these days? Remember, we used to hear about Senator Manchin all the time. And who's the one that's swinging things there in Washington nowadays?
Well, there were, as you point out, with Manchin there and Sinema from the state of Arizona, the 2 of them, when there was a narrow Democratic majority, they could vote no and stop the Democratic Party from doing what the Democratic Party wanted to do. And they stopped and slowed down. The Democrats wanted to get rid of the filibuster so that they could pack the Supreme Court. And those 2 said, no, we're not doing that. There were quite a number of things that they hoped to break the filibuster and then, with a slim majority, make radical changes in tax policy and spending policy and things like that. Right now, there weren't any real dissenters until it started to smell, and then people realized this is not a popular position. And then you got up as high as 8 Democrats going, okay, this is beginning to threaten my ability to ever get reelected. So I don't think there are any permanent moderate Democrats in the same way that Sinema was a principled person who is a liberal Democrat, but she was principled in certain ways and said,
Family Matters amplifies the loudest and the proudest political voices in the Black community today.
What's up, guys? I'm CJ Pearson. There's so many incredible perspectives here in the Black community that you're going to hear from each and every week.
Because faith matters, country matters, and family matters.
This is exactly what the mainstream media was missing by not actually going to Black churches, going to Black barbershops, talking to the people at the forefront of this change in the community. Let me start here.
Family Matters with CJ Pearson.
Each and every week, we'll see you here. Talk to you soon.
Follow and listen on your favorite platform.
We're not going to cheat. And Manchin also didn't hate energy and didn't hate economic growth and didn't hate jobs and would not vote with the Democrats on a number of issues when they would go into cloud cuckoo.
All right. Well, we'll let you get the popcorn out and continue to monitor all that and appreciate those updates tremendously, Grover. Thank you very much for joining us. This is Grover Norquist, the president of Americans for Tax Reform, live with us here on Mottek On Money on 790 KABC. Mottek On Money continues, 790 KABC. Home affordability, big issue here. How's this for an idea? 50-year mortgage. President Trump floating the idea of a 50-year mortgage in a social media post over the weekend. In response today, the Federal Housing Finance Agency director who oversees the mortgage giants Fannie Mae and Freddie Mac posted that they are working on the 50-year mortgage and that it would be a complete game changer. Let's bring in the expert on this, Jeff Lazerson, the president of MortgageGrader.com, based here in Southern California, also Orange County Register real estate columnist. Jeff, thanks for taking the call and give us your reaction to this idea of 50-year mortgage.
Well, Frank, I think it's fantastic, actually. I was plugging in some numbers. So, for example, today, $806,500 loan amount at 5 7/8. The payment is $4,770 a month. If you did a 50-year loan, the payment would be $4,171. So it's roughly 13% cheaper to do that, or about $599 a month. That is a significant difference. So I really like the idea, but probably what's going to happen is the interest rate won't be exactly the same. Generally, the longer you go out, the more they charge for the rate. So I don't know that they're going to charge the same interest rate for a 50-year loan as a 30-year loan. Today, we do have 40-year mortgages, and the rates are structured a little bit higher than 30-year. Probably even a bigger game changer would be, like they are doing with the 40-year loans today, is if it's interest only for the first 10 or 20 years. So if you were to do a 50-year mortgage with interest only for the first, say the first 10 or 20 years, the payment would be down to $39.48 a month, which just would be, a monster huge difference compared to, $47.70. It would be, it would just be fantastic. So the downside of all this, of course, is you're going to pay a lot more mortgage interest. I calculated out almost $2 million more in mortgage interest over those additional 20 years. So you're going to pay a lot more. I think the strategy would be get into the house with the lower payment, the 50-year mortgage, and then at some point refinance it into a 30-year or even a 15-year when you can afford it, when your income is a little bit higher.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC, on the air live with Jeff Lazerson, the president of MortgageRater.com, an Orange County Register real estate columnist. So mortgage rates have been bouncing around lately, I see here, Jeff. Is your calculation based on what rate? Look, it's around 6% here now for the 30-year rate?
Yeah, I do have the rates out too as well. So the 30-year fix today, locally anyways, it's at 5 7/8. So it is up a little bit from when last we talked. It's up about a quarter or so. The 15-year fix is at 5.25% at one point, and that's up to $806,500. So if you go 806,501 to 1,209,750 in LA and Orange County, the 30-year fix is at 6.25%. The 15-year is at 5.75%. Those are both with 1 point. The jumbo loan over 1,209,750, that's at 6.25% at 1 point, and then FHA and VA loans are way down at 5.38% at 1 point.
Very interesting. Now the question for Fannie and Freddie, the mortgage giants, they would be the ones to take this 50-year mortgage on, right? Or would there be some other offerings along those lines?
Well, I think the key is for Fannie and Freddie to make the offering, because right now the 40-year mortgages are in the market are with those so-called non-QM lenders or the exotic lenders. So they're not well distributed out there. But if Fannie and Freddie do this, which it sure sounds like it might happen, then there will be wide distribution. And of course, you have the implicit or explicit government guarantee of Fannie and Freddie. So more investors will be happy to jump into it. But of course, if you're going to loan out your money for 50 years instead of 30 years, you're probably going to, again, ask for a little bit higher yield. But I could see some real merit in doing this, because then you have, like today, we have choices. We have 15-year loans, we have 20-year loans, we have 30-year loans. Most people take 30-year loans. Some people take a 15-year loan. And it's going to be the same thing with this new model. You might have some people say, well, you know what? I want a little bigger house, so I'm going to go with the 50-year mortgage because the payment's going to be more affordable for me. So I'm pretty excited about this. I think it'll be good for some people, not for everybody, though.
Here's an idea: 60-year mortgage. Let's keep going, right?
Yeah, I guess so, Frank.
Right. So
you're pretty funny.
Well, we're looking at affordability. So at least they are thinking about ways to make housing more affordable. Any other ideas that have gotten your attention here? Any unique products that are available these days? Many people don't even know about the 40-year mortgage, I'm sure. So thanks for sharing that. And anything else that we should know about?
Yeah, well, the one other thing that could be a game changer is the Marjorie Taylor Greene introduced legislation a few months ago to get rid of the capital gains tax for people that were selling their house. As it is today, if you're a single person, you get an exemption of $250,000 as long as you hold the house for 2 years. If you're a married couple, then you get an exemption of $500,000 as long as you hold the property for 2 years. And then after that, of course, you have to pay capital gains tax, which I think is 19 or 20%, something like that. But what her bill was talking about doing was getting rid of the capital gains tax period, every 2 years or something like that. And you think about, there's so many people, Frank, that don't want to sell their property because, and I hear it all the time, I don't want to pay the tax. I don't want to pay Uncle Sam hundreds of thousands of dollars for capital gains. And it's really stopping a lot of people, especially elderly people, from moving down. So if her bill comes to pass at some point, I haven't heard much about it since it was introduced, but if it comes to pass, that would be a real big game changer. Other game changers, if you're going to buy from a builder, a lot of the builders are throwing money at buying the rate down on the mortgage. So that, is something else that's interesting, but it's not sticking as much because people are buying postage stamp lots, and a lot of these new builds are 3 stories high with virtually no land on them. So, but it is a good idea. The builders, some of them are buying the rate down to 4.99% and even lower.
Just about 30 seconds left. Any new construction to speak of here in the Southern California area?
No, I mean, we have pockets of stuff that's being redone in all over LA and a few parts of Orange County, like in the Rancho Mission Viejo area.
All right, that's about it. Jeff Lazerson, president of MortgageGrader.com and Orange County Register real estate columnist. Jeff, always great to speak with you. Thank you very much for taking the call live with us here this afternoon. Winning day for stocks to kick off the new week. The Dow up nearly 400, NASDAQ at more than 500, S&P 500 up 104. Stay tuned now for the News Blitz and 790 KBC.
What's up, guys? David Pollack here, former Georgia Bulldog, former analyst with College Game Day, and host of my new show, See Ball, Get Ball. I'm a defensive lineman. That's why that's the name. You see the ball, you go get it. We're going to dive deep into college football. We're going to break down film. We'll have bold takes, real conversations with the biggest names in the sport every single week. If you eat, sleep, and breathe college football like I do, man, I promise you, See Ball, Get Ball is for you. So do me a favor. Follow and listen on your favorite platform.